Thank you for the introduction, Kevin. Good morning, ladies and gentlemen, and welcome back to Singapore, Nick. We're very delighted to have Nick here with us today, especially because he changed his flights to be here on time. So very appreciative of that. Thank you for doing that. And we should just start. So before I take off, I would like to just say that, we've had in the earlier part of year, a very massively successful IPO of ADNOC Logistics and Services, which is ADNOC LNS. The final offer was 2.01 AED, which is dirhams, with total proceeds of about $800 million US, with an investor demand of $125 billion US, which is an oversubscription of 163 times, perhaps a level that a UAE listing has never seen before. So my first question to you, Nick, is what was your reaction? Oh, I'm used to it, or I expected it, or was it a little bit of, I had some inkling, but this surpassed my expectation?
We thought we might be oversubscribed, but we didn't anticipate anywhere near the extent of oversubscription. And I think what happened, Abhishek, is during the process, so there's a history on the ADX of ADNOC having delivered a series of good value IPOs. And I think there was a general understanding in the Gulf region that ADNOC LNS stands to benefit from the significant growth of the ADNOC system in terms of providing logistics and services to their client companies. So there was a degree of excitement about the potential for us to grow as a business. And what we saw during the IPO process was a lot of demand for meetings, far beyond what we expected. We got rolled out on a daily basis initially to 7 or 8 meetings, then to 20, 25 meetings on an individual day. Then all of a sudden there were 50, 60 people joining some of those meetings. And so we had an inkling that there was going to be very significant demand. We didn't see a shift in pricing to reflect that. So I think there was an expectation on the part of ADNOC that they were willing to allow this listing to go out at good value to the market despite the significant growth in demand.
Thank you. So, in terms of, if I was to just look back, you had a record-breaking IPO in shipping, which itself is a bit of an outlier. But if you look back around, say, 10 years in shipping, probably the market has dried up with the shipping IPOs. We hardly had any, and whatever we had they were all successful. A lot of them in recent years were successful, but not as much as this one. So do you think it is a resurgence of shipping IPOs, especially the post-pandemic era?
Yeah, it's an interesting question. So there are a few aspects to our IPO. The first one is we look at ourselves as an integrated logistics company. So we're not a pure play shipping IPO. We have assets which are providing oil field services support, integrated logistics and supply of machinery, manpower, diesel fuel, water to the islands in the UAE, as well as international energy shipping services and various other aspects of integrated logistics support to the energy ecosystem. So it's not pure play shipping. Secondly, I think there's that exposure to the very significant growth in the ADNOC ecosystem and the growth in the Gulf that was driving demand. But equally, there definitely is some latent demand to participate in shipping IPOs which have good underlying risk aspects and good opportunity for growth. So I think it was the combination of those things.
Yeah, I would, if I was to just probably share my thoughts again, in last 1.5, 2 years, probably post-pandemic when the travel resumed, in a global role, travel frequently like most of the people here, and I made quite a number of visits to the US, just trying to understand the investor appetite. And I would say, public or private, there was a significant amount of interest in shipping, which probably in a long time in my career, I would not give the exact number of years, I'm not that old. But yeah, so I guess, in the US, I found a lot of investment managers, asset managers, hardcore investors, ready to speak to us. And the reason, the hypothesis, which probably I developed over after a couple of trips was that, a punchline to them was using the pandemic as a live example, if you are a PM, if you're a portfolio manager in one of these funds, if you did not have really a little bit of shipping in your portfolio, you really did not do a very good balancing job, because all through the pandemic, all the asset classes were going one way and shipping was going one way. And then we produced a couple of graphs and showed it around, and that really gave us, private or public, irrespective, there was definitely a latent demand in terms of investors. They were really more interested. Not like the private equity post the GFC, but it was more of an interest. Okay, fine. Even if it is cyclical, even if it is intrinsic risk carried asset, I don't mind having a little bit of it on a portfolio basis, so that I don't miss out if there is a bull run like the one that happened in post-pandemic. So very good point and insight. Now, we know that you chose the UAE for the IPO, and like me, a lot of you have known you for a very long time. So we know that you've had a very flourishing, intense financing maritime career in Singapore ecosystem as well. So I guess my next question to you is that what is the difference between the UAE stock exchange, where you decided to list, versus, say, a Singapore stock exchange? That's the first question. How do you see as well the investor knowledge base, investor savviness between these two stock exchanges, as well as if you were to compare with the more well-known shipping listing places of Oslo and the US? So UAE Stock Exchange and Singapore Stock Exchange, investor difference, and how do they compare to the more kind of prominent New York and the Oslo Stock Exchanges?
Okay, so it's a really interesting question. I've been involved in listings in Australia, in Oslo, and involved in listed companies in Singapore, Indonesia, and now in Tokyo, and now in Abu Dhabi. And I would say the biggest single difference is the progression of, over time, of analyst willingness and ability to cover stocks in multiple international markets with the right degree of insight to enable international investors to participate effectively. So, we executed this listing. We had 10 analysts providing strong confidence that they would cover us immediately post-listing. We see growth coming in the analyst coverage going forward. And as long as you have that strong international analyst coverage of your stock, you address 2/3 of the problem, which is the ability to communicate effectively to the market and to create knowledge of what you're doing as a business. And I think that certainly exists in Singapore. It certainly exists in Oslo. There's no doubt it exists in the US and Tokyo. And we see that in Abu Dhabi as well. We're getting the right level of analyst coverage, the depth of coverage, and the effective analysis of the stock so that the market understands us. In terms of investor knowledge and investor maturity to participate in the stock, there are a couple of aspects. So the retail investor market in Abu Dhabi tends to be very yield focused. And that was one of our concerns, is that we've gone to the market as a comparatively lower yield stock, as a growth stock. We pitched ourselves as a growth stock, and there was a question, despite the outcome on demand, will we actually get the same degree of appetite because we're not offering the same dividend yield as other stocks going forward, but we're very, very focused on growth? Will we still get that appetite? Well, that's clearly been answered, both domestically in the UAE and in terms of international appetite. The great disappointment was the level of deallocation that we had to apply to international prospective investors on IPO, simply because of the oversubscription rate. But definitely the maturity is there. The other aspect I think of maturity of knowledge in the UAE is there's a very strong understanding, particularly in the Gulf, of what comes next in the energy sector. And that's allowed a number of the large Gulf-based investment funds, including international investment funds who participate in the Gulf, to really understand what's driving our growth going forward. So we listed on the 1st of June. Our share price has grown. I think yesterday we closed at 362, so we listed at 201, so we're around 80% up. We've gone from around $4 billion to $7.3 billion in market cap. We continue to grow very, very strongly. For example, we've grown our jack-up barge fleet by 25%. We'd acquired the world's largest fleet of self-elevating, self-propelled jack-up barges in the year before the IPO. That's now grown 25% post-IPO. We've added 3 VLCCs to the fleet recently. We've got a large order book of LNG carriers coming on that were ordered before prices reach their peak. So people are understanding our growth, they're understanding our ability to deploy those assets to strong, long-term, profitable contracts, and they're benefiting from it because you're seeing the uplift in value of the stock as we deliver the new opportunities and put them to work on contract.
Fascinating. I mean, that's quite interesting, quite a success story. If I was to just, dwell a little bit more into it and ask, would you, did you consider, or when you were debating with your bankers and analysts, did you consider a New York listing, for example?
We talked about it. Did we actively consider it? I don't think so, because we knew the depth was going to be there on the Abu Dhabi exchange. There's a very close link between ADNOC and the Abu Dhabi exchange, and ADNOC had already listed a series of entities with that ADX exposure. I think there's a really strong combined effect of the market being able to see all of the ADNOC positive growth flow going forward and understand the relationships between those flows and the individual entities themselves. So I think it was given brief consideration, but it probably wasn't a very strong contender to have any option outside Abu Dhabi.
Fair point. So I see quite a few faces in the audience who represent a lot of very strong sectors and with possibly quite strong balance sheets in the last couple of years, who might be considering going public or would at some point in time. So if I was to ask you, with the experience that you've had across the geography, I mean, is there a quick, like a cheat sheet or do's and don'ts? I'm not asking you to tell me what your bankers pitch, but generally 4 or 5 points that at this nascent stage of planning, if they are here and if they are keen, they should look for, whether it is getting the smartest bankers, or maybe it is the geographies, selection of stock exchanges, the story that you said with respect to the ADNOC and the Abu Dhabi Stock Exchange relationship. Some 3 or 4 points just for everybody to think about.
Okay, so number one, I would say ask yourself every single day, why are we listing? A tremendous number of companies list that shouldn't list. So ask yourself, why am I listing? And when in the process of answering that question to yourself, you help to answer the question to your investors, which is really, really important. Why are we becoming a listed entity, and what value is that actually going to add to the market? You give up a lot of things when you list. It's costly to be a listed company. There's heavy administrative oversight. You share a lot of strategic insights on your company that sometimes you'd prefer to keep internally. There are many other structures for raising finance and listing. So that's the first question. Why am I listing? I think the second one is, who is going to be interested in me and why? So you have to develop a really strong, legitimate story that underpins your listing. It's not the case that every single investor is a good investor for you. And it's not the case that you're a good investment for every single investor, even if your value will go up. So who am I to investors? And who are the right investors to participate in my stock? If you have that very clearly in your mind when you're speaking to your prospective investor group, you'll rapidly be able to make the right decision, who you want to invest in you and why they should invest in you. You can answer their questions. Then an extension from that is, what do I want my book to look like post-IPO? Who do I want the investors on my book to be, and why? Because there are some investors who'll be able to add value. Now, don't anticipate that every single person who invests in your stock is going to help you to find a contract. But there's all sorts of reasons why it's great to have certain investors on your book, and there are certain reasons why it's not great to have certain investors on your book. There are investor types who will be very flexible in terms of exiting your stock. There are investor types who'll be forced to exit your stock at certain points. For example, if your volatility is high, there are certain investor types that you don't want on your book because they're going to be forced to exit when the market moves by a certain amount. And external forces could force your investors to exit, which will force your price down, and long term it's very hard to recover if your price goes down. So think very hard about the book build, which investors you want on your book, and then finally think about the financial structuring behind your IPO and what you're going to do post-IPO in terms of financial structuring. If you set yourself up with the wrong base for financial structuring, it's going to be very, very difficult to solve that going forward. In our IPO, we listed with negative net debt. And that's a very, very unusual IPO outcome. Why did we do that? We've got at least, and I say at least by very far, $5 billion to invest over the next few years. So listing with no debt puts us in a position that we can signal to the market very strongly that our next $5 billion plus of investment is going to be debt financed and is going to be very, very value accretive to our investors.
Thank you. Great insights. So, I mean, if in case people want to, kind of go to the stock exchanges for ringing the bells, please don't forget us. But I guess there is a lot of conversation we had on the IPOs, but moving us slightly bit off from here, and I guess like me, a lot of people will be interested in knowing that other than the record-breaking IPO that you had, what is your business strategy? And you just concluded your first half results, phenomenal results again. Key highlights being 307 million net profit, 3 times year on year. You have won an EPC contract for building an offshore island in the UAE. You also ordered 2 dual fuel VLCCs, not so common in the crude tanker sector. So, like me, I think we would like to know a little bit more on 2023 so far, what has worked for ADNOC L&S, and what do we expect out of ADNOC L&S in next 18 to 24 months?
So our strategy is to grow. What we've done so far is to grow, and we intend to grow. No, I won't do that to you. But really, in simple terms, that's our strategy is to grow. Why is it to grow, and is that too simple a strategy? Well, the first one is we have a very strong anchor tenant in ADNOC itself. So we service the integrated logistics and international energy shipping requirements of the ADNOC Group. And if you look at any of the ADNOC Group company websites, you'll see that all of them are growing very significantly. They're growing significantly in terms of oil production, LNG production, new renewable energy sources. The delivery international is growing, and our participation internationally is growing as well. So we need to grow to support the growth requirements of the ADNOC Group. Beyond the ADNOC Group, so everything that we do for the ADNOC Group, we know that we can do successfully for others internationally. And it makes sense for us to grow our fleet to service international requirements as well as the ADNOC Group requirements. So we're growing in integrated logistics. We're extending, first of all, our service offerings beyond what we do already. So we have something called the Integrated Logistics Services Platform. That's a system whereby we deliver personnel, equipment, fuels, water to all of the energy fields, as well as providing energy field support, repairs and maintenance, and so on in the fields. We want to grow that domestically by extending our solutions. So one example is the contract you mentioned, the G Island contract, which is a $975 million EPC contract that will lead and provide a significant portion of the services to. So what that's doing is extending beyond our existing logistics services to providing additional support, not only directly in the construction activities in relation to the island, but bringing together the service providers who'll be able to support different elements of those construction projects. Also, we'd like to extend that platform internationally. So what we're doing with ILSP is we take a contract whereby one of our clients, ADNOC Offshore, in the past used to enter into hundreds, if not thousands, of individual contracts for small vessels to provide all sorts of services to their operations in a single year. We now have one contract under which those services are provided, and we charge on a volume basis, metric tons, and on a specialized services basis. So for example, if someone needs a single day delivery of a critical component, that will be a separate requirement, but literally the client simply says, we have this item at this location and we need it at that location, the rest is our problem. So we think that that's an activity that we could solve problems with, certainly across the Southeast Asia region, but also in other areas around the world. So we'll grow our integrated logistics business that way. On international energy shipping, we continue to provide services for essentially for CFR delivery of ADNOC hydrocarbons internationally, but also a significant part of our international energy shipping business is focused on non-ADNOC clients. And we're growing that by looking at specific logistics requirements. We're very focused on long-term, but we do also provide spot services. For example, the 4 VLCCs, 2 of which we'd brought into our fleet by mid-year. Now 3 are in our fleet. Those are operating on a spot basis, but we see very specific logistics which can benefit from the assets. So we're growing both the international energy shipping outside ADNOC, inside ADNOC, as well as the integrated logistics services solutions to ADNOC, others in the Gulf and others around the world.
Thank you. That's quite a plan, and we wish you all the best. in executing that. I think we've got time for maybe one question, if anybody has a quick one. Otherwise, we'll wrap up. Yeah, sure.
Yeah, thanks, a remarkable one. So I just had a question with regard to the IPO. If you look at the shipping IPOs, they're all sort of pure play tankers or maybe VLCC or product tankers or whatever the case may be. There's no, probably you were the first, if I'm not mistaken, first integrated logistics service provider IPO in the world. Maybe Sovcomflot probably was closer, but not really as much. So did you have difficulty or did you have questions being raised with regard to this?
It's such a good question, and it was such an important point of concern ahead of the IPO. Will we be able to get investors to truly understand what it is that we do? And so we've really spent a lot of time on that. We expect we'll have to continue to spend a lot of time on that. We've had our first quarterly results out. Our next quarterly results are coming, and then at year end, we expect that there will be a lot of explanation required, a lot of close working with the analyst group to make sure that everything's fully understood and extremely well explained. We need to make sure that we get our annual report out in great detail to explain these points, because indeed we're not shipping pure play, and the integrated logistics component, which is fundamental as the majority of our operations, is really important to explain very well to the market. But what I have to say is the IPO experience was positive. We found that prospective investors were able to rapidly onboard and understand the segmentation of our portfolio and how each of those elements added value. We had really good questions on a regular basis about the importance, for example, of marine services, which operates at a somewhat lower margin than other parts of the business, but why we would continue to be involved in that, why it's important to us, how we can look at the profitability going forward of different aspects of the integrated logistics fleet. And it actually speaks to one of the questions that you asked earlier on in relation to the maturity of the market. We actually found that the market, with the support of extremely strong analysis, was able to get there very quickly on the complexity of our business.
Thank you. Thank you, Nick, for taking time out, for flying out here and speaking to us. We really appreciate that. And I guess we all enjoyed the session. Thank you.
Thanks, Abhishek.